Hello traders, today is the 6th of December 2012 and the time in London is 09:50 a.m. in New York 04:50 a.m. This video is about wave charts, how one can count Elliott waves accurately, how one can avoid wave count mistakes. At the end of this video, one will understand how to count Elliott wave more accurately. Thank you. Let's get started. Thank you for watching. Let's get started. Okay. The first thing that we must understand is that if you want to achieve consistent winning trade, if you want to make excellent trading decisions, we must use the market principle. The wave principles allow traders to make excellent decisions. Apart from the Elliott wave principles, there are other principles in the market that we will discuss when we are recording this video. All right. The first thing I want traders to understand in this video is that the wave principle is a dynamic. Okay. It's not static, it's changing all the time. So we count 1, 2, 3, 4, 5 waves on one particular time frame. For instance, on the 10-minute chart, it's not the end, okay? It's not finished. That 1, 2, 3, 4, 5 wave that we have count on a single time frame can be also a single wave, okay, on another time frame. So 1, 2, 3, 4, 5 wave on the 10-minute chart can be just the first wave on the hourly chart, for instance, okay, so the wave principle is dynamics. Sometimes trader will go, for instance, on the monthly chart, they count 1, 2, 3, 4, 5 waves, and they say definitely the market will come down. And sometimes the price does not go down because on another higher time frame, probably on a yearly chart, the wave principle is dynamics moving forward, okay. So we want to understand that when we are counting a wave on a particular time frame, as I'm going to do it now on the 4-hour chart, I will be talking to you on the 4-hour chart. Understand that the wave principles is dynamics. So do not get caught with these mistakes that a lot of Elliott wave traders are making. Because sometimes traders get into trouble. Why? Because they are using the wave principle like a science. They say, yes, this is the pattern. Yes, this is what's taking place. And the price will definitely come to this level. And it doesn't. Why? There are other market principles that are in the market that we are talking about. The trading triangle, the leaders, the news, and the fundamentals can change the dynamics of the market. We are talking about, okay, human beings. In the center of the market, we are talking about human beings. Human beings can change their mind quickly. All right, let's move on. Let's go now to the 4-hour chart, wave chart. The first guidelines, what I care about when I'm talking about the wave principle, I want traders to follow a special patterns, okay, or to follow a guidelines. You will hear me always saying to traders that when we are trading, we are looking on our left-hand side, okay? So you are facing your screen. Your left-hand side is where I'm moving my cursor now. What has happened on your left-hand side? It will tell you something very important. The price on this 4-hour chart, this is the guide that I use, okay? So on my left-hand side, the price was going down, okay? How do I know? I know because I keep my eyes open and the price display lower lows, lower high. Somebody can draw a trend line like this, okay? Another person may say to me, George, why don't you draw it like this? Okay, that's it, here it is. So I will tell you which one I prefer. I will draw something like this. If I extend this one here, no, this is not what I want to do. This one, if I extend this one a bit up, I'm going to color it now into red so everybody can see it. Okay, bear with me. I'm a bit excited because I just filled my cup of coffee now. So you can see that if the down move to the downside is contained below this red trend line. So I'm happy with this trend line. So I can discard this one here because the down move from here to this level is still below my red trend line. So I don't need the one that I just removed, okay? This one here, which I'm going to color also into red, I'm just making it parallel, okay, in agreement with the top one here. So on my left hand side, this is the guidelines, the price was on a down move. I cannot deny it. That's what I see on my chart. Even if you are in Bangkok or you are in Bahrain, you are in Egypt, okay, lovely Egypt people. So you will see exactly the same thing on the 4-hour chart like me, unless you are using different setting for your charting, all right? Now the price, as you can see here, something has changed. Suddenly, the price came out of the bearish channel now, telling us that, okay, George, the bearish momentum that was progression here is okay, diminishing. That's why the price is coming out of the bearish channel. I will say to myself, all right, give me the first higher low. All right, so there is a kind of communication taking place between myself and the price. I say, now give me the first higher low. So as I see the price pop out of a bearish channel, I do not buy straight away. I'm waiting for my first higher low. The language of the price will display lower lows, lower highs in a downtrend. In the uptrend, the price will display higher lows, higher highs. If one of these principles is violated, we know that that momentum is diminishing, either bullish or bearish is diminishing. We agree on that, okay? So my first higher low, that's what I got here. You see where I put my spotlight now? You see, this was the last low. But this is the lowest low on my 4-hour chart. Looking on my left hand side, there was a down move. This is my first higher low. Ladies and gentlemen, when I'm counting wave, I'm doing exactly the same thing all the time. It allows me to avoid making stupid mistake or crazy mistake. But even if I make mistakes sometime, I will know at one point, because I know that the wave principle is dynamic. So, for instance, I count wave on this 4-hour chart. The next step, I will use another market principle which stated that the higher time frame commands the lower time frame. So once I count the wave on this 4-hour chart, ladies and gentlemen, I will go to the higher time frame, daily chart, weekly chart, monthly chart, to see the bigger picture. So if I made a mistake on this 4-hour chart, it will show straight away, because I don't want to lie to myself or fool myself or get very excited about the wave principle only to end up making a wrong decision. It's painful when one loses money. It's not a nice feeling, all right? Okay, so we want to get it right. So once I see the first higher low, ladies and gentlemen, I will wait. If the price breaks the previous this one high here, because if it's bullish, first wave must be bullish. One of the characteristics, as I explained to traders at www.24elliottwaves.com, talking about practical Elliott wave count, practical Elliott wave trading, following the step by step, okay? The price itself, the #1 indicator. The first Elliott wave in the uptrend should be dynamic, should be strong. We want it to break at least one resistance. If it doesn't, we will say, all right, very interesting. What kind of first Elliott wave is this one? Okay, we may just tick it and say, okay, you are first wave. Let's see, but we want it at least to break a resistance. So this one is not too bad. This one you see, my first Elliott wave has taken this resistance here. So, okay, I will give it a chance. You see, so at this point in time, I don't know what the price will do next. I don't want to know even what the price will do. I may have a bit of idea what the price is likely to do, but I don't take it for granted. All right? So, my second Elliott wave is this one. Talking about wave count, the second Elliott wave, according to the wave principle, must not be a total retracement of the first wave, which means must not cancel the first Elliott wave. All right, that's something else, okay? That's something else, but let's move on. So I will say to myself, first a second wave. So this was my first higher low. I'm waiting for the second higher low, which will be the end of my second wave, right here. This one was a bit down very fast. You can see almost total retracement. Not a very good, it's not very convincing. Okay, probably I'm talking to myself. Okay, let's make it a bit bigger so everybody can see. Can you see on your chart? Okay, makes sense now. So here we are. It's almost, you see, it went down a bit too far. No, very good. All right. Okay. So this is my second higher low. So here I will be saying to myself, something very interesting is about to begin, the third Elliott wave, which is usually the strong Elliott wave. All right. So you see now, so far, I'm just following my step by step, and I'm going forward, okay? So, but the third Elliott wave, if it's truly a third Elliott wave, ladies and gentlemen, should, okay, be equal in length, talking about the length of the first wave, should be at least equal to the first wave. Otherwise, it's not the third wave. So the length is from here. So, ladies and gentlemen, we can do it now as I'm showing this here to you. I can move the length of this one and project it here. So, as the third Elliott wave has begun, I can set a target here. You can see some traders took profit here. Can you see on your chart? So the third Elliott wave at least should attain the same length like the first wave, equality, okay? All right, at least that. So that's why some traders, clever traders, took profit first. All right, so once we are here, we are watching this level. In fact, nothing should stop you to pull a line there. If it's going to be truly a third Elliott wave, it must attain this level. So just for fun, okay, let's put a different color here. I will use, in this case, yellow won't be visible, though it's my favorite color. I'll put green in this case because of my background. So I will say to myself, if this is truly the third Elliott wave, at least I will grab some profit here or secure my gains as soon as we are here. If the third Elliott wave failed to achieve this length of the first wave, we will put a big question mark on that third Elliott wave, or we may think of, okay, a kind of complex Elliott wave, probably, okay, underway. So which means the third Elliott wave probably may be divided into 5 small waves. This is a more complex Elliott wave. Step by step. Do not worry if you do not understand what is a complex Elliott wave. Higher degree, lower degree, blah blah blah. Okay, it's not blah blah blah. It's serious matter. Okay, all right. So unless the third Elliott wave is going to be, okay, a complex 5 wave, which means 1, 2, 3, 4, 5 small, okay, sub wave forming our third Elliott wave. Okay, so you see now. So these are just, I'll put back my first Elliott wave right here. So now we have it here, ladies and gentlemen. The third Elliott wave. So at this point in time, I'll be saying, all right, okay. In fact, as I explained to traders at www.24 Elliott wave about the projection of the channel, which means, all right, you see here, this channel here, okay, you can project it 3 times. You see, already on your chart, this channel here, okay, very important channel, equal size. You can move that channel if I, okay, that's the equal size. This channel below is the equal size here, and you can do it 3 times. Usually the third Elliott wave can attain the 3 times this channel. First, second, and the third time somewhere here. Usually the third Elliott wave can go up to that level. Now, so we see that the price went to this level. Look on your left hand side. You see? Look on your left hand side. And then it pulled back before going up again. Alright? Our third Elliott wave, hold on please, is up to this level. In fact, this third Elliott wave, okay, is a complex Elliott wave, okay, not a gorgeous one, but a bit messy, and finally, okay, it went to this level, okay. But if you like, I can draw it for you, the subwave within that a third Elliott wave. Moment please. Moment please. These are the subwave within my bigger third wave. Okay, so you see now, and the 5th wave, as you can see, my third wave has been divided into 5 minor wave. in this case because ladies tend to trade better than men. In my experience, I've noticed that the female TST traders are performing better than the men. That's my own observation. I can be wrong, but to please the lovely ladies, let's put a bit of pink here. Okay. All right. Okay. So what I will do, the first one here, I will color it very colorful, very interesting. Okay. To differentiate the subwaves, I'll bring in the different colors here. It's our own chart, nothing should stop us. We can put any color we like. Thank you for watching. And I will put now white. Okay. Always there's a competition between the white and the black, so I'll put the black here. Okay. Now you see, so we have our this from here. Follow me carefully here. Though I'm talking like this, I'm very serious. So from here to this level here, that's the third Elliott wave. As you can see, my third Elliott wave has been divided into 5 small waves. Follow me. From here to here, that's the first subwave of the third wave. 1, 2, 3. That's the second complex subwave of my third Elliott wave. A, B, C. 1, 2, 3. This is the second wave from here to this level. You can see that it has been divided into 1, 2, 3. It's a correction. When we count 1, 2, 3, that's a correction. For those who are using Fibonacci for quick information, if you are using Fibonacci, think of Elliott wave correction. If it's a truly retracement, we want to see a kind of corrective waves. Those who are using Fibonacci like a crazy or magic one in this market. So 1, 2, 3. That's my second subwave of my third wave, and from here to this level here, that's the red one. Okay, that's the third subwave of my bigger third wave, and the white one from here down to this level, that's the fourth subwave of my bigger third wave, and the black one here, that's the fifth subwave of my third wave. So from here to this level here, we have seen, okay, this is the third Elliott wave, which is a complex third wave, has been divided into 5 subwaves. The second subwave, which is the pink one here, is a complex subwave. The bigger third wave from here to this level, this is a complex third Elliott wave. Ladies and gentlemen, as I'm speaking at this, you may say to me, George, it's become a bit too complicated for me, and I'm not interested at all this mambo jumbo, as some of my fundamental traders like to call it, and all this blah, blah, blah. But look on your left-hand side. What the price is doing? The price is just respecting the key levels, okay? Price come to a resistance level, probably acknowledge and pull back. You see, pay attention to you see this level here. Price come to that level, price pull back, all right? Pay attention to this one, the price changing direction here. Can you see on your chart? I want you to see here. It went up and changed that. This is another level on my 4-hour chart. You see the same level price come, it pulled back a bit before going up. Here, pay attention to here where my cursor is, this level here. Can you see it? Price came to that level and pulled back again. Traders are taking profit as the price moving up because in the uptrend, the price looking for a better resistance level. So even if you do not want to know about Elliott wave, draw your resistance, your support, your trend line, your channel, and you'll be perfectly okay. Because traders are buying from one support level to the next resistance level. As the price approaches resistance level, they take a bit of profit, probably pull back a bit. If they are more willing to buy, as the price pull back a bit, they will buy again. That's what's happening. You see the blah blah blah. They pull back, and is forming. This is a human being behavior being okay, clearly exposed here by the wave principle. You see this level here. You see that's why the price again pull back here. So all this retracement complex is due to the fact that the resistance on our left hand side, the price is acknowledging those key levels as human being Remember that I said to you, at the center of this universe, every decision, everything that is happening, is human beings, okay? So they are taking profit, you see? So that's why we have a complex, a third Elliott wave. Moving on very fast to avoid that the video is too long. And then finally, we have our fourth wave. So first wave from here to this level here, second wave from here down to this level here, and third wave from here to this level here. The third wave in this case is a complex wave, and then the fourth wave from here down to this level here. Now we have a kind of extended, a fifth wave, extended. All right, almost, you can see that it's almost the size of, let's compare it to the third wave, almost equal to the length of the third wave so far. Can you see? Almost equal to the length of the third wave. All right. So we have counted 5 waves. Ladies and gentlemen, you see the guidelines, how we do it? Look on your left-hand side, draw your channel, and if a new trend, the Elliott is very simple though. There was a trend, there was a pause, there is another trend, there is a pause, there is another trend, trend, pause, trend. You take it like that with a channel, you look on your left-hand side, you don't assume anything. You understand that the price is the number one indicator. Though I put here my lovely stochastic, now in this case I have to, this is not my favorite setting. Let me put it back to my favorite setting, which is 833. Okay. Alright. So, do I put my stochastic, a moment please, correcting my settings. This is my favorite stochastic 833 here. Do I have the stochastic below the chart? I did not talk about anything about the stochastic. I can use the stochastic together with the wave count to make excellent decisions. You see, this is the gorgeous one. The beginning of the third Elliott wave right here. Stochastic oversold. All right. You see now? So, we have counted 5 waves. We have extension. Why do we have a wave extension, ladies and gentlemen? This is where a lot of traders get into trouble. Our friends that are very, now I'm not trying to criticize my fellow traders because of the way their mind function. Talking about myself, my mind, the way my mind function, I can tell you now, when I see something that is very complicated, I try to pick the most important thing. That's what my mind is doing all the time. I'm more concerned about the most important thing. That's why I like the market principle, the market stable data, because it works all the time. So some traders will get into trouble because you see here the price is approaching this resistance level. Yes, you can take profit here. Price going from one support level, looking for better resistance level. Traders were taking profit here. Some traders were selling. It's not a bad decision. So what we can do, as we have counted the third wave, okay, we can draw a line there. And then we can use the size of this wave and say, maybe if we're going to have a wave extension, we may come up to this level. So this can allow us, okay, very rich traders to control the risk. Now, let's put it back. But we don't know what the price will do until the price has done it. That's why I do not care about what the price will do. I care about what the price has done or is doing. So here, as the price was approaching this level, we know that there's a resistance here. So we counted 1, 2, 3, 4. At this point, it starts going now. We say this is the 5th wave. But how do we sell at the end of the 5th wave? Now, this is very interesting, ladies and gentlemen. Pay attention carefully, ladies and gentlemen. Pay attention. We see it all the time. Myself, I've done it sometime. One of the mistakes I made in the past was that I was selling all the time at the end of the third Elliott wave, and thinking that that's the end of the wave. By that time I was doing it, I did not understand the wave principle very much. But a lot of traders usually sell here and forget at the end of the third wave, and the price will come back and break above it. But if you want to sell, control it. So suppose you were here and you say, okay, this is the end of the 5th wave, it will definitely come down. Okay, ladies and gentlemen, if you decide to sell here, let's color this line now into red. Okay, if you decide to sell here, you see here once you see this candle here, if he break above it like he did here, all right, if he break above it here and give you a higher low, just come out, just come out, just come out. Know that don't chase it anymore, unless you are a long-term investor and you can control the risk. I'm not saying that it's impossible, because there is another way traders trade. They don't come out with their trade, they do other things. I don't want to talk about that now. So know that, okay, it's going away, okay? But to avoid, once you count the fifth wave, ladies and gentlemen, usually will end at a visible resistance level or a hidden resistance level, talking about Fibonacci extension or the pitchfork tool, okay, zones. So now we counted fifth wave right here on this day of, okay, the 30th of November. So we will switch to a higher time frame to know whether we are at a resistance level. Is this a valid resistance level? We want to know. We go to a higher time frame. I'm now on a monthly chart to check where you see my red line here. This is my the end of my fifth wave. It's not a bad place. You see this candle here, and then there was a resistance. There was a seller here. So I will say to myself, okay, it's not too bad place. So go back again to my 4-hour chart. If I receive now, here we are. So here was a resistance level. The red line, in fact, where traders were selling, was not a bad place to sell. It was a resistance level. But there is a better way to sell at this zone. How do you sell? How do you sell? You will prefer it, ladies and gentlemen. Very often, you will see it. So, what I'm going to do now, moment please. I'm going to move my fifth wave back to this level where we were at that time. So I will be here like this. So I will draw, ladies and gentlemen. So we count 1, 2, 3, 4, 5 to this level. Okay. So we have, in fact, I will say to myself at that point in time that we had a double top here. The fifth wave failed. I will say when we were here that the fifth wave failed to go above, okay, the high of the third wave. Is very bearish. It's very bearish. So we will be using the TSDW24 to take, okay, to enter the trade. All right. Now, so there is another way. So we on a 4-hour chart. You see now. So we see, okay, it looks like resistance here, double top. Switch to another time frame. Go to maybe 30-minute chart, 15-minute chart to see whether the price will break below a trend line, okay, and retest it. That's the best way to sell. So you were here, okay, you prefer it, okay, to break below the fifth wave here, like this. You see, there was one candle at least here. You see the red one here, went down and retested here. You may give it a chance like this. It went down for 8 hours, but didn't go too much, and quickly return back above the red line with this bullish candle. So you know that it's not working. It's not going far. All right. So if you go back above it, leave it alone. If you return back below it, all right, give it another chance. Okay. So you can see that we will prefer something like this. Okay. Break below it. Okay. A bit, which means bear. Some people sold it down fast, big time. And then he bring it back to retest it. And at the edge here, we bring it down. But it may be tricky on this 4-hour chart to do it. You may see it clearly on a 30-minute chart or 50-minute chart or 10-minute chart, when you will see the price will break below a rising channel and come back and retest the rising channel. But if the price returns back inside the rising channel, you know that, okay, it's going back up. So you leave it alone. All right? Hope you find that useful, okay? If you are more experienced trader, okay, and your trading style is different from mine, okay, just nod your head and okay, thank you for watching. All right, so here, so you can see that some traders were selling here. It was not a bad decision. It was not a wrong place, but the price was extending to the upside. Price going up, price looking for a better resistance level. It's a market principle. If we come here on the, this is now I'm on the weekly chart, my red line where we were stopping is here. The smart money is so obsessed to sell at the best place. So this resistance here was not too bad. But the smart man is saying, George, if you want to sell, why don't you sell it at the best place? Now, sometimes they may not, sometimes they will, but very often, the greedy smart trader will prefer to sell at the best place. Here, I'll bring it back again to where we were, if I remember clearly. Okay, somewhere here, isn't it? So, it's not a bad place to look for opportunity to sell, but as we are taking this signal here, we know that there's a better resistance here. So if it crosses above, okay, if it crosses above the red line again, we will leave it alone if we are bearish. You see now? So you can understand why the price now is extending to the upside. Another thing I want traders to understand, going to the mind of other traders, let's go now to the, you may say to me, this is a wave count. Yes, it's a wave count, but wave count is a psychological game. You are not alone in the market. So on this daily chart, because sometimes traders are using one tool and they forget other things. Do not do that, okay? On this daily chart, we see that the price went down on this channel, and now we are again doing exactly the same thing. But you can notice that the price, you see, in this session, a lot of traders are watching this pattern. This is what they call the inverted head and shoulder. They will say this is the head here on the daily chart. Okay. The head, the left hand side shoulder, and the right hand side shoulder. My fellow traders will do a projection like this. We want to know what they're thinking. So they will do like this, and they will project it to the other side, and they will expect the price to reach the target zone somewhere in this region, around 13180. You see? So some traders are watching that level. But when we are counting the wave, we do not forget that, okay, other traders are using different tools, but we want to follow the price. Now we have what I call a wave extension. The wave extension will take place when the price is looking for a better resistance level. So you will see the price will break the first resistance level, which is the red one here, and then we'll seek the next level until the market is satisfied to sell. The next thing that we do not forget when we are using the wave principle, we do not forget the trading triangle. The market first, the setup before the individual financial instrument, the heart of the trading triangle, the news, the fundamentals, and the leaders. This week, since the 14th of November 2012, we have seen that the price, okay, the euro, we are looking at the euro USD currency pair, though we are looking at the forex, this principle, this strategy is valid. The wave count is valid for stocks, for futures, okay, for all financial instruments. Now, as we are looking at the euro USD, we know that there was some debate regarding Greece economy, Greece debts, the eurozone, the fiscal cliffs, the economy news as the market is bearish towards the US dollar. The euro was benefiting from that, market sentiment. The market sentiment, talking about the news, can change the dynamics of the market. Anytime you are about to enter the third Elliott wave, do me a favor, go to Google Finance, www.google.com/finance, Yahoo Finance, check the economy news regarding the financial instrument that you are trading, go to forexfactory.com, go to our website, click on economy calendar, check the economy news to know that all the blah 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 talking about technical trading, we must combine the technical with the fundamental to make a viable trading decision. So on this 4-hour chart, we have counted 5 waves. Now, at this point in time, you remember at the beginning of the video, I was telling you that the wave principle is dynamic, it's not static. The time now in London, as I'm doing this video, has been a bit long video now. It's 10:28 a.m. in New York, 5:28 a.m. Now you can see that we have been speaking for a long time now. All right. On this 4-hour chart, that's all I can say now. Few days later, if the movement continues to the upside, we may probably notice that, okay, I may come back and tell you that, in fact, the 5 waves that we have count to this level has been, in fact, one single wave on a daily chart or on a weekly chart. Or I may come back to you and say to you that, in fact, okay, our third area wave was not ended here, but there was a, in fact, this was a part of the third area wave. But right now, as I'm looking at this chart now on the 4-hour chart, in fact, we're on the live chart. You can go to the 2-minute chart, you can see it's sticking out. Traders are fighting and trading. Yeah, I mean, crazy traders right now this morning. Okay, economy news coming up. So traders are playing here. Okay, some are very crowded time frame. 5-minute chart. On a 50-minute chart, traders are fighting with the stochastic overbought sell, oversold buy. Okay, you can see here. So the point I want to make, okay, is that that's what we can see right now. As I'm speaking to you, it's 10:30 in London on this 4-hour chart. If we see more extension, okay, we will not deny it. We will come back to it. If we have made a mistake, we will note, because the wave principle, okay, does not lie. In my view, the euro has benefited from the economy news and all the market sentiment relating to the fiscal cliffs and the Greece situation recently. In my humble view, in normal condition, the euro must return back to the level of 129.00. That remains to be seen. That remains to be seen. 129.00. We will see whether the euro will return back to that level to retest it. Because recently there were a lot of distortion in the eurozone, in the euro USD currency pair. Looking at the chart, there was some distortion. We will see whether the euro will give us a second chance in a zone of 129.00. I hope you have enjoyed this video about wave charts that you will put into use, okay, to make excellent decisions. To summarize, to count wave, we want to look on our left-hand side, draw the channel. The first area wave must be very, very bullish. If a wave has been cancelled, we must restart counting the wave. As we are using the area wave, we know that we are using the price. We do not forget other market participants, and also we must remember that the wave principle is dynamic. 5 waves on one time frame can be a single wave on another time frame. The higher time frame commands the lower time frame. A happy trading to you all, and speak to you soon. We are the TSTWSYS 008 traders.